Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, July 21st, 5:35 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list. Let's get right into it. Well, state of the market. We are we are in an uptrend. You can see over here on the trend gauge, market leadership showing bullish slash uptrend. However, six of the 21 list from last week have been taken off. So six more stocks will be presented in just a few minutes here. As far as the indexes go, all five of the major indexes that we review in these videos are trending above their short-term 21-day, medium-term 50-day moving average, long-term 200-day moving average. This warning sign, really a yellow light now on the NASDAQ 100. We're just over 5% extended from the 50-day moving average. So that can be coming off if we get below that 5% level as we continue to pull back in the big cap tech stocks. So what happened today? Tight range chop, day three of money flowing from growth stocks and the BIG-7 into low beta sectors. Here are the final numbers on the day. RG8, this is our 8 growth ETF composite, just barely negative on the day. S&P 500, just barely positive on the day. Kind of disappointing after a 0.35% gap up, and we chopped within a tight 0.5% range all day, but closed near the low of that range, just barely positive. Even bigger disappointment for the NASDAQ 100, gapped up 0.6%, but quickly put the top in, worked its way lower, and attempted a rally in the afternoon, but sold off late, down 0.3%. Dow just barely positive on the day. Mid caps down 0.2. Russell 2000 small caps down 0.35. Global diversified 60/40 stock and bond up about 0.1%. In-house GROTECTION down 0.19%. This loss was basically all NVIDIA today. NVIDIA, I saw some reports that NVIDIA and Microsoft are going to have the biggest reductions in their percentage allocation when the NASDAQ 100 gets rebalanced. That's supposed to take effect Monday. Don't know for sure if that was the explanation, but NVIDIA down 2.7% on the day, while the SOX index closed up by 1% on the day. So other semiconductors seemingly unaffected. And then we'll go through the tail of the tape in the updated 21 over 21 leaders list. Let's get right into it. You can see here the S&P 500 consolidating in a tight range for the second day above the ADMA. If we look at a 5-minute chart, you can see the gap up, immediate sell-off. The sell-off stopped. We didn't break yesterday's lows. It pretty much just chopped in this tight 0.5% range, closed at the bottom of the range. Contrast that with the NASDAQ 100, gapped up 0.6%, and did break yesterday's low. So continued underperformance by the NASDAQ 100, but the sky not exactly falling, as it wasn't a continuation of the harsh high volume sell-off that we saw yesterday. Could not get back above the ADMA, however, but still holding above that 372.85 breakout level, which we hit. 712 was the breakout day, just 1% above the 21-day moving average, 5.2% above the 50-day moving average. Let's go to the Dow Jones Industrial Average. Looking better certainly than anything else. You can see any of the other big cap indexes making a higher high. Obviously not a relative strength higher high, as we've talked extensively about this underperformance, but now moving back above the 21-day exponential moving average of the relative strength line. So continued strength there. This just could be portfolio managers repositioning in defensive sectors, anticipating the August-September doldrums, which is kind of typical for what you see in the market. Those are very clearly the two weakest months, and maybe front running that. Let's look at mid caps here. They've been acting well. Second day of a pullback, still not able to break above this 499.50 high from February, but still nothing to complain about here. Like I'm fond of saying, if you're above the 80 MA, you've got nothing to complain about. Nice ultra short term trend higher. Small cap, same thing, second day of a pullback above the 80 MA. Unable to get through their February highs also. Let's check the VIX very quickly. Not a lot of volatility today. You can see the tight range finished down on the day. We're trending below that 21 EMA. That's where we want to be. The dollar up 0.3%. So four straight day for the dollar up. That's putting some pressure on stocks. Now it's hit this declining 21-day exponential moving average. So let's see what happens after 4 days up off the bottom of the range. How did the dollar affect precious metals? Well, let's start with GLD. That was down 0.3% on the day, normal 2-day pullback after some recent strength. SLV silver, also weak, down 0.5%, but still holding the ADMA. Gold stocks, however, did close positive, up 0.3%, bouncing where they needed to off their 21-day moving average and holding the 50-day moving average. We have a position in NUGT playing this change in character move above the 21. Excuse me, that happened on 7/12. Bitcoin, BITO. Bitcoin up about 0.5% today. Tight range over the last 5 days, below the 21 EMA, but above the 50-day moving average. One of these is going to have to give at some point. Let's flip the bonds now. Bonds traded tightly today. You can see just barely a blip on the chart there in a tight range, up less than 0.1%. Long bond TLT, even tighter, just barely positive. No big impact on rates. Here's the 30-year, barely down on the day, and the TNX 10-year down 0.4%. Trying to figure out what it wants to do. Failed breakout, from failed moves come fast moves in the other direction. We saw that. Then the bounce off the 50-day moving average, just hanging around the middle of that range that it broke out of. And then, of course, we saw the breakout fail. So that's the interasset correlation that we review in every video. Let's get to the tail of the tape. You can pause this. I'll hit the highlights. News showing blank today. Nothing major to report, but let's put something in there. How about FOMC on Wednesday? That's something we'll certainly be paying attention to. Second consolidation day in the day count. That's a 34-day rally since the breakout. 9th day above the 80 EMA, 39th day above the 21 EMA. Tight range pullback, both for the S&P and the NASDAQ not violating any major areas. Basically just a chop all day. Defensive sectors you can see here carrying the torch for the leadership on the day. SPLV, that's low volatility, up 0.5%. SPHB, basically flat on the day. Financials, industrials, and communication services weak. Cloud stocks weak. Retail weak. Not much in bonds. In-house in the portfolio, we added to SMCI. They upped their sales guidance yesterday, got some price target raises today. We added to that position. That's been acting well. DT, Dynatrace, has been disappointing since its attempted breakout. We cut half that position today, and we sold the SQQQ. Probably wishing we would have held that with the move down toward the low of the range, but really this was kind of an emergency type thing if we were going to continue to sell off. Instead, we sold it for a small profit today, slight raising of the overall portfolio beta. Bottom line, all-day tight range chop, day 3 of low beta outperformance. We'll see what happens next week now that the NASDAQ 100 rebalance should take effect on Monday. We'll see how those stocks trade and see what the market wants to do, as it's basically a lock that the Fed is going to raise interest rates by another 25 basis points next Monday. Let's get to the 21 over 21 list now, and we will start off with the stocks that we punted, barely breaking below their moving average. Let's start with Celsius. We sold a third of our position today, showing relative weakness, can't get back above the 21 or the 8. However, consolidating in a bullish manner on light volume here at the 50-day moving average. Very obvious what the bulls want to see, a nice move off of this level and break back above the 21 and the 150 level, which it has failed at multiple times now. So that's the first one being off. As I said, we still hold that. We still hold half of our Dynatrace too. Closed basically right on the 21. But you know, not showing relative strength and two failed breakouts here. Relative weakness very obvious, right? And this is a failed breakout above this range, although it did pull back basically right to the pivot, sitting on the 21. Um, we about a 6% profit on half of what we sold and a 2% loss, I think, on the remainder of what we sold, but certainly not outperforming the index. And if this was going to be a leading stock, we would expect it more than this 2-day up, and then give basically all of it back over a week and a half. So this might need another earnings report or two, but the numbers aren't exactly gangbusters for growing earnings either. So DT, the second one that was punted, the third one, Tesla, another one that we own, but two closes below the 21 and a failure to get back above the declining 21 today, although it took multiple shots at it. Let's look at a 5-minute chart here. First at the open, gapped up, tried to get there, failed. Midday made another rally, tried to get through the 21, failed, and faded into the close. Not good action from Tesla. We're still sitting on 35+% gains from our two buys back here in the 190s. We did sell our most recent purchase at about an 8% gain yesterday when it broke the 21 EMA. That's the third stock being punted. Fourth one is one that's been on here for a while, ELF. Uh, ELF, I talked about this big sell-off of 5% on 719, maybe money from the sector, mutual funds, pension funds, managers, portfolio managers, maybe putting some of it into ODD, a hot new cosmetics uh, IPO. Regained it yesterday. If it regained it yesterday, it should have held it today. It didn't. A negative reversal back below the 21. So ELF came off the list. Maybe time for a base. This has really had a fantastic move uh, from, you can see this breakout from the mid 40s all the way up to 120. Just maybe time for ELF to base after multiple breakouts and moves higher on their last couple of earnings report. It does have earnings in 2 weeks. Intuitive Surgical, another one punted as it gapped down on earnings, tried to recover, but couldn't get back above the 21. This one wasn't much of a relative strength leader anyway, as you can tell by looking at the line, but high volume sell-off, closed below the 21 on earnings. That's number 4 off the list. Toll Brothers coming off the list. It's like right on the 21, but on DHI's earnings, several of the big home builders had a negative reversal like this. We're flipping back to the ETF ITB, which we play via nail. We wrapped some nice profits on that before. Now that we're pulling back to this level again, we might be playing that again. So Toll, an individual name coming off, and a broader index going on in ITB. And let's see, is that everything? No, no, yes, that is. That's 6 that came off. Tesla, DT, ELF, Toll, Celsius, and Intuitive Surgical. Let's start off with ITB here. You can see it pulled back. This isn't all builders. There's quite a bit of retail in here, and the retail names held up better. I almost put Floor and Decor or RH on. Instead, we decided to go with ITB to see if this continues to hold the 21. Last time we got here, we got a very nice move off there. Lock that gain in. We can reload it actually lower than where we sold nail next week if we get a favorable stochastic cross. So ITB, the first one added. Next one added, FCX. Uh, Copper has been choppy but trending higher. This is the leader in the group. Got back above the 21. We want to see if there's a move here. Michael's done a deep dive into the fundamentals for copper, and they're very favorable. Leading stock in the sector. We put it on there. They reported earnings, gapped up yesterday, sold off on lower volume today, but after earnings and it being right above the 21, this would be a nice low risk entry should we decide to take it. And note the PE of 25 and the growth ratio of 24 puts the PEG ratio, price earnings to growth, right around 1. That's nobody can argue that it's overpriced. So that's the second ad. The third ad was a story stock that we want to keep a close eye on. I know a lot of people that have dug into this and are big believers in it. This stock just made a very big move, got a little ahead of itself, had a nice harsh 3-day pullback right to the 21 EMA, and they report earnings next week. We've dug into the story, like I said, and we know people that believe in the story, and we're going to see how this reacts around earnings. This has the potential with their breakthrough in lithium-ion batteries, which are much safer with the way they develop and produce them. And supposedly they'd signed the U.S. Army as a client, and they've got a lot of other big battery companies signing on as clients. So we're going to see how this reacts to earnings next week. Next up, ONON. Recall we held this before it really had an awful reaction to its prior earnings report. Formed a nice cup with handle, broke out, is consolidating on lower volume right around the pivot and the ADMA. ONON shaping up very well. The fundamentals are still fantastic on this one. Back on the list is NVO. Their weight loss drug made this nice tight range back above the moving averages on Thursday, tight inside day on Friday. Uh, Stellar fundamentals on this one also. And finally, Palo Alto returning, got punted off. Big volume break on some news that Microsoft was breaking into their business segment. It rebounded immediately for 3 days, showed 3 days of strength on decent volume relative to the sell-off. Now the last days of a consolidation have been on much lighter volume, and it reclaimed the 21 on the pullback. So we'll see. Maybe it doesn't need to form a base. Maybe it'll continue higher off this 21. Either way, that's a nice low risk entry on the leader in security software. And let's see, that is it. Those are the 6 that we added. Let's get back to the carryovers from last week, starting with AEHR consolidating after a high volume move up on its earnings report. Coin consolidating after a high volume move up on basically, we're looking at some possible favorable regulatory rulings and the okay of a spot Bitcoin ETF. GDX were in this through NUGT that bounced where it needed to. TDW consolidating, a leading oil stock, and oils have been looking much better. Generac, tight action along the 8 and 21 EMA. SMCI, we added to this today. As I said, they upped their sales guidance and it reclaimed that 300 level after a 2-day shake. WFRD, another leading oil consolidating around the ADMA. Dave & Buster's continues to make newer highs, fitting the theme of spending money, people spending money, continuing coming off of COVID for entertainment experiences. That's that and the service sector have really certainly seen pretty good times as of late. MongoDB pullback after an attempted breakout. The U, we own this 2-day pullback after a touch of the half Livermore 50 level. Live Nation just continues to trudge higher again with the theme of spending money on experiences. Uber continues to trend higher. Hey, if you're going to be drinking when you're at these experiences, you need Uber to get you from place to place. Nice fundamentals here and nice price action to go with it. DraftKings tight week and a half consolidation after a move out of its base. Ferrari pull back to the 21 EMA. Last couple times it happened, it bounced nicely off there, and supposedly they've got a massive backlog. And NVIDIA holding that 440 area, which is key, and the 21 EMA, which is coming up to that 440 area. But 3 days of a sell-off today on higher volume. My belief is that this is tied to that NASDAQ 100 rebalance. Definitely a leader in the space, in the sector, in the market, and we'll see what next week brings with NVIDIA. And that wraps up our 21 over 21 list. As always, we'd love to hear from you. You can reach me at don@revereasset.com. If you'd like to become a client, email my partner, Dan Stewart, Dan@revereasset.com, or you can call us at 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. Our flagship portfolio is called GROTECTION. That's growing assets in uptrends, which we've been in since we broke out earlier this week, starting with the March 29th classic O'Neill follow-through day. And we protect assets in downtrend as we did in 2022, losing less than half of what the market did. If you're interested in this approach, reach out to us. And with that, I'll wrap up the video for the week ending July 21st. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great weekend.